I need to hurry up and finish because I'm only like 6 pages away from finishing the chapter. I just realized. I mean, this computation looks way easier because you don't have to do this extra step. Yeah, whatever. Okay, and this is how you record the entry. Cash, machinery, accumulated depreciation, machinery, new and old machinery, gain on disposal of machinery. I'm not really thinking through it as much as I was before. I don't care about rationale. Here is the summary form. Here are the accounting requirements for recognizing gains and losses on exchange of monetary asset. 1. Compute the total gain or loss on the transaction. This amount is equal to the difference between the fair value of the asset given up and the book value of the asset given up. If a loss is computed, always recognize the entire loss. If a gain is computed, A, and the exchange has commercial substance, recognize the gain. If it lacks commercial substance and no cash is involved, no gain. If some cash is involved, what? No, if some cash is given, no gain is recognized. If some cash is received, you recognize this amount of the gain, this equation. There we go. I feel like I'm getting this a little bit better. I mean, I'm getting this section of the chapter a little bit more than the previous sections. That was funny. Can I please just be done, dang it? I still have 2 more learning objectives to get through. Man. But thankfully they're only 5 pages long. Costs incurred to achieve greater future benefits should be capitalized Expenditures that simply maintain a given level of services should be expensed. You must have 3 conditions in order to capitalize cost. The useful life of the asset must be increased. The quantity of units produced from the asset must be increased. Okay, so only one of 3. It doesn't have to be all 3. It's either the useful life is increased, quantity of units produced is increased, quantity or the quality is enhanced. The quality of the units is enhanced, the number of units is increased, or useful life of the asset is increased. So if you only are maintaining the existence of an asset, it's expensed. But if you increase the value of the asset or something, if you increase the future benefits of it, then capitalize. So most expenditures below a certain amount of money are expensed. Let's set up a depreciation schedule for a waste paper basket. No, nobody calls it that. I guess it's... Let's set up... long-lived waste paper basket. Wait. The waste paper basket is deteriorating. We must charge depreciation expense. No. The distinction between a capital expenditure and a revenue expenditure is not always clear-cut. Let's just apply our concept consistently. There are 4 companies incur 4 major types of expenditures relative to existing assets: additions, improvements and replacements, rearrangement and reinstallation, repairs. Additions, increase or extension of existing asset, improvements and replacements, substitution of an improved asset for an existing one, rearrangement and installation, movement of asset from one location to another, repair, expenditure that maintain asset in condition for operation. But apparently they say repairs should be expensed. Okay, so you capitalize additions. There's one problem. I don't care. I'm just going to skip past that. Improvements and replacements. Oh, great. There is a difference between an improvement and a replacement. An improvement is you replaced the old one with a better one, and a replacement is you replaced the old one with one that is basically the same as the old one. You betterment it. You substitute a better asset. Replacement, you substitute a similar asset. I mean, that's pretty easy. I was able to figure that out before even reading the sentence. Let's say that it increases the future service potential of the asset. Oh, come on. There's 3 different ways? You've got to be kidding me. Here is one approach you use. If the carrying amount of the old asset is available, let's replace the pipes in its plumbing system. Well, now, let's replace our pipes. Instead of the old iron and copper tubing, we will use plastic tubing. Hilarious. So the old pipe and tubing have a book value of $15,000, cost of this minus depreciation, scrap value of $1,000. Plastic tubing costs $125,000. They paid $124,000 for the new tubing after exchanging the old tubing. They paid $124,000 in cash to receive something that is worth $125,000 because their scrap value was $1,000. Isn't that the reason? I love how the $1,000 isn't even included. Okay. Where's 150? Oh. Accumulated depreciation. So the one weird thing here is how to calculate the loss on disposal of asset. They got $14,000. Well, that's straightforward. You take the book value, compare it to the fair value. Wait. No, they have a book value and they have a scrap value. Because it was worth $15,000. They received $1,000 for it. So they had a loss of $14,000. That's where it comes from. Look, they even said that you do this minus 1,000. Yeah, but they already told you what the book value was. Oh, so the other two approaches are if you cannot determine what the book value of the old asset is. Now here's some new approach. They don't even explain. Capitalize the improvement, keep the carrying amount of the old asset on the books. This approach was used to substitution approach. This approach is capitalize the new cost. So just do nothing, don't do anything extra, just capitalize the new cost. Charge to accumulated depreciation. Rearrangement and reinstallation. My brain. Am I mistaken about these learning objectives? No, I'm not. Because this learning objective is only 1 page long. Dang it. No, go back. Maybe this will be a good table for me to memorize. No, I don't feel like reading this. This is just a summary of all the stuff I read already, so I'm just not going to read it. That was funny. Okay, just get to the end of this, please. I'm almost done. Only one last page. Hmm. Dude, I'm on the last page. They sold the machine for $7,000. Cumulative depreciation is 1,200 times 9 plus 600. So they have, 1,200 times 9. Oh, man, is that my mouse or is it just me being dumb? They have 10,800 plus 600. Man. Yes. See, I'm not stupid. Now, let's see here. It was right there. Okay. Machinery was the original cost of this. So, now, let's see here. Your book value was... Oh, jeez. Well, they didn't tell you the book value. Well, yeah. You have this minus your depreciation equals your book value. Your book value, your sale minus your book value is equal to a gain of 400. How could there possibly be a gain over an involuntary conversion? I guess in this case it is a gain because they didn't want to sell it. That's literally the only reason it's called an involuntary conversion. It's because they didn't want to sell it, but they had to. They received this much cash. The accumulated depreciation they listed already. The plant asset was this. They already listed. The gain is 500,000 minus this. So that's simple. I'm not even going to read the rest of that. Miscellaneous problems. I don't care. We're done. We're done. We just have to do our assignment and then we're done. How long will this take? 10 minutes? I mean, I kind of like thought through this chapter while I was reading. So you would think I'd be able to get through this pretty quickly. Probably not. I'm just too stupid. What is overhead or burden? Okay, so it's basically administrative costs that are not directly related to the asset. So, it's gotta be this, right? Yep. I don't care. Continue. In which of the following circumstances would a parcel of land be least likely to experience depreciation? So land all the other cases land was decreasing in its value. In which of the following cases should the firm capitalize interest costs? It's whenever it will result in a benefit, future benefits. Wait, let's see. Oh, wait, never mind. Interest costs. Oh. It's when they stated that it's basically when the land is being developed. um, oh, what? Come on. There's two things. I don't get this. When a company purchases land with the intention of developing it for a particular use, interest costs associated with those expenditures qualify for interest capitalization. Therefore, if the firm does not plan to build on the land, but does intend to sell it... That was funny. A firm cannot begin to capitalize the interest on a qualifying asset until it determines that was correct. How should a company account for an exchange that lacks commercial substance and in which no cash is received? Okay, immediately recognize the loss. It should defer gains and immediately recognize loss. Haha, I did my reading. I understood the reading. Oh no, math. What is the amount to be capitalized as the cost of the machine? Dang it. Dang it! No, let's see. Now I have to do thinking. That was funny. The cost of the machine. Isn't it just this? Oh, come on. The price plus the installation charge. The price plus the $400. Oh, I just didn't read the whole question because I'm an idiot. Oh, man. I'm stupid. A firm, blah. Okay, if you make a payment on an account payable. I didn't think through that question. If a firm substitutes a similar asset in place of an asset that is currently used, it is making a replacement. Why does asset depreciation give rise to a gain or loss? I didn't read the other answers, I just knew that was the right answer. As a factory located in a floodplain, this would be involuntary conversion. Only one more correct answer and we're good to go, probably. How should an asset be valued when it is received through an exchange that lacks commercial substance, involves receipt of cash, and represents a gain? No, the correct answer is at the fair value of the asset received, less the deferred portion of the gain. Because the exchange lacks commercial substance and cash is involved, the gain is deferred and the asset... No, it says cash. You received cash. I don't care. I'm not even going to read the explanation. How should companies record the value of property, plant, and equipment? I think I know what's going on here. I was confused about something. I think... No, I don't get it still. I think this is the correct answer because I remember reading that phrase. That was funny. Brown Company, oh. Well, let's see. There is a lack of commercial substance. It received cash. Oh no, I have to do a complicated calculation. I don't want to do a complicated calculation. Fair value of 1,200. It would have been normally a gain of like this, but it's probably something less than this. So let's see. Maybe it's this one. Haha. I cheesed my way through that. I knew it was going to be it was a portion of it, a portion of this, and it probably wasn't this because this was this. So it's this. Anyways, we're done. I didn't do it the way you're supposed to do it because I don't care.